This is Matt Russell from the FX Power Course, and welcome to the Daily FX walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound, and this is the hourly chart. This is a simple support line that I added to the hourly chart a few reports back, waiting for prices to come back to the former support line, which I'm expecting to act as resistance in the future. However, I want to abort viewing this pair on the 60-minute chart and actually pull up the daily chart. And again, this is the Euro Pound daily. And if we add a support line to that chart, we can see that prices right now are at the third touch of a longer-term support line here. So we might expect at the current level to act as support. We had two touches of the line confirming the line. So I like this trade right here, actually, at these price levels. But of course, anything can happen. The stop location would be about 10 to 15 pips beneath this. You can call this a hammer candle right here, and the low of that candle is about 90.36. So maybe about 10 to 15 pips beneath that point. So moving forward over the next 24 to 48 hours, if you can get an entry close to that level, again, this is the way I like to set up trades. The most important thing is where I'm going to place my stop. That dictates everything, and in fact, it dictates exactly where I'm going to enter. So I'm going to personally look for an entry near that area. Again, placing my stop beneath 90.36. So if I can get an entry near the, let's say, the 90.60 area, 90.50 area, that would be in terms of my own personal risk parameters, that would fit in well. But again, you have to make that decision yourself as to exactly how much risk you want to take in the trade, because of course anything can happen, and we have to always expect that we're going to be wrong when we enter into these trades. By doing that, that's the way to manage your risk properly. The next chart is the Aussie Kiwi, and here we had a situation. This is a trade that I mentioned. I am still currently in this trade, although the market did try to pick your pocket here with a second test of that 38.2. Very brief test, took out this low here by just a few pips, but then a very sharp rebound. I actually wasn't watching the market at this point in time, and was lucky to come back and see that the pair had already rebounded off that test right there. My stop is located just above the 120 figure, and I still like this trade here, even more so now that prices came down for that second test, trying to shake people out. So again, I would like this trade. However, we're a little bit too far away from that 38.2 right now, which is in the 120.60 area. But again, this is something that we can look for over the next 24 to 48 hours. If we can get an entry, we're going to place our stop now beneath the low of the second test of that 38.2 fib, and the low of that candle is 120.21. The next chart is the Pound Swiss daily, and not much has changed here. Again, just waiting for prices to come down and hit that longer term support line. Also something that I noticed here, it's a kind of loose pattern here, but a head and shoulder pattern. This looks like a fourth wave here. So I like the 170 figure as potential resistance moving forward. The ideal location for a stop would be above that 74.90 area. So again, this is a pretty thin trade idea. I'm not too enthusiastic about it, but I do like, again, near that 170 figure, maybe a stop near the 170.50 area. But again, this would be a low confidence trade idea. But if we can get an entry near that 170.50 area, or even near, let's say, just below that 170 figure, placing our stop in the 170.50 area, again, that's a trade that maybe you can look for yourself. The next chart is the Euro Swiss, and not much has changed here either. As I mentioned during last week's report, we had a bull flag pattern forming here, and prices were breaking out to the upside, but it seems now that prices actually have reversed back inside the channel line as we speak right now. I don't like this development here. I was expecting an upside breakout here to test the longer term resistance line. So right now, if you entered on a break above that resistance line, I might exit this trade right here and just wait for the short setup at the longer term resistance line. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.